Is this the end for Chinese companies on the U.S. stock market? The U.S. and China head towards decoupling. Welcome to China Uncensored. I'm Chris Chappell. This episode is sponsored by MOVA Globes. You know, two countries on this globe seem to be moving further apart. Can you guess which ones? For years, China has been taking advantage of the U.S. economically. And it's gotten so bad that some people are saying, hey, if the relationship isn't working out, maybe the U.S. and Chinese economies should get divorced. Let's call it conscious decoupling. A few weeks ago, we did an episode on why the Communist Party is terrified of decoupling. Meanwhile, President Trump doesn't seem too worried. Here he is at a White House press conference in September.
So when you mention the word decouple, it's an interesting word. So we lose billions of dollars, and if we didn't do business with them, we wouldn't lose billions of dollars. It's called decoupling, so you'll start thinking about it.
Well, I certainly am thinking about it now. And the Trump administration has now taken a big step towards decoupling.
The U.S. Securities and Exchange Commission is pushing ahead with a plan that threatens to kick Chinese companies off of U.S. stock exchanges.
The SEC is the U.S. federal agency that regulates the stock market. And by the end of this year, the SEC is planning to propose a regulation that would lead to the delisting of companies for not complying with U.S. auditing rules. Basically, this Christmas, they're giving Xi Jinping a stocking stuffed with coal. So what does it mean when the SEC talks about Chinese companies not complying with U.S. auditing rules? Well, major Chinese companies like Alibaba and Baidu trade on the U.S. stock exchange. However, China refuses to let inspectors from the Public Company Accounting Oversight Board review audits of them. Why? Well, this article from 2015 called "The SEC Caves on China" explains. It says that China-based auditors have refused to comply with SEC subpoenas for their clients' paperwork, citing Chinese laws that treat such corporate information as state secrets. That's weird. Why would documents from totally private Chinese companies be considered state secrets? But instead of pushing back, the SEC quietly carved out a China-sized exception. When Chinese companies list on U.S. markets, basic auditing rules won't apply. So that means that Chinese companies can come to the U.S., get listed on Wall Street, and rake in lots of money from American investors, and the U.S. government can't review the audits of those Chinese companies. Allowing Chinese companies onto U.S. stock markets without standard regulatory oversight is a problem. And it has already come back to bite U.S. investors. I'll tell you how after the break. Welcome back. Chinese companies can be listed on U.S. stock exchanges even though they refuse to be audited. And this has caused major problems. Even as of that article from 2015, tens of billions of dollars in U.S. market value have disappeared in recent years as more than 170 U.S.-listed Chinese companies have faced scrutiny for embezzlement, theft, misrepresentation, and other alleged abuses. And it hasn't gotten better in the last 5 years. Just this past summer, the Chinese company Luckin Coffee was caught in a $300 million revenue fraud after an SEC investigation. Yeah, Luckin Coffee inflated its revenue by $300 million. Then its stock price collapsed and it got delisted from NASDAQ, which can only mean one thing. It's a great investment opportunity. What could go wrong? There are more than 200 Chinese companies listed on U.S. stock exchanges, with a combined market cap of $2.2 trillion. This year alone, Chinese companies have raised $12 billion in initial public offerings, all while essentially ignoring U.S. law. And it's not just Luckin Coffee type fraud that puts U.S. investors at risk. The political machinations of the Chinese Communist Party are also a threat to U.S. investors. Like how Alibaba founder Jack Ma criticized Chinese regulators, and then China put the brakes on a $310 million IPO of a company tied to Ma, which caused Alibaba's stock on the New York Stock Exchange to fall 8%, which means U.S. investors in Alibaba lost a huge amount of money based on the whims of the Chinese Communist Party. So the SEC is trying to delist Chinese companies that don't follow the rules that all other companies in the U.S. do. But it's not just because of Trump. This is becoming a bipartisan issue. Back in May, the Senate overwhelmingly approved a bill that could bar Chinese companies from U.S. stock exchanges. The big issue is where these Chinese companies are getting their American investment money. Much of it is from pension funds and college endowments in search of fat investment returns, which is insane. It means the value of Americans' pension funds can be affected by the decisions of a hostile foreign government. This delisting of certain Chinese companies is just the latest in a post-election sweep by the Trump administration to crack down hard on the Chinese Communist Party. A couple of weeks ago, Trump issued an executive order banning investment in Chinese firms with military ties. Which makes you wonder, how long had that been going on? But despite what you might think, the Chinese Communist Party doesn't sound too bothered by the Trump administration's harsh actions, because they're betting they can get Joe Biden to put a stop to it. Fang Xinghai, the vice chairman of the China Securities Regulatory Commission, said, "I think during the Biden administration, we should be able to resolve that problem, because it's not an intractable problem. All it takes is goodwill on both sides and a willingness on both sides." And considering Biden's record with China when he was vice president, there could be a lot of willingness on both sides. The new SEC rules will be open for public comment in December. But according to Andrew Bishop, global head of policy research at New York-based Signum Global Advisors, if the new rules haven't been set in stone by the time Trump leaves office, Biden could water them down. Even if they are imposed by January 20th, Biden could issue new rules to override them. And you know what that means. Time to start investing in that new exciting Chinese company, Beijing Peaceful Rise Naval Industrial Corporation, Inc. And this episode has been sponsored by MOVA Globes. You've seen one of these MOVA Globes on my desk before. The technology is really amazing. When you pick it up, it keeps spinning. And when you put it back on its base, it corrects its motion and starts rotating again. It's powered by ambient sunlight. MOVA has dozens of other cool designs too. MOVA Globes make a great gift, or a great set piece if you have a podcast, for example. So click the link in the description below and pick your favorite version. MOVA Globes is currently offering our viewers a special discount. And when you buy a MOVA Globe, you'll also be supporting your favorite show about China. So click below to check out MOVA Globes now. Once again, I'm Chris Chappell. Thanks for watching China Uncensored.